Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so Airbnb, it's starting to consolidate under this $140 a share level here. It seems like it's lost some of its luster here, even though maybe some of the hotel chains are doing a little bit better. Is this declining according to maybe some of your data?
Yeah, I think declining or consolidating is really the right word. And a lot of what we see in the stock is exactly what we see in the LikeFolio data. The first thing that we look at with Airbnb is always, web visits. And when we look at Airbnb versus others in the space, Airbnb web visits are down 10% year over year, whereas, Hilton and Hyatt and some of the other hotel chains are holding steady or gaining, which really tells us that Airbnb is clearly losing share to traditional hotels and bundled travel services. It's just become one of those things where the luster has worn off in terms of Airbnb, and people are starting to really appreciate the value and services that hotels provide, especially in urban areas where there's plenty of hotel options. The other metric that we look at is Airbnb's app engagement. That's down 3% year over year, despite a rollout of some really interesting and high quality features. So engagement is slipping. Airbnb's pushed hard on AI, concierge services, etc., but that really doesn't seem to be taking hold, or it's at least only allowing them to kind of hold the line. And so I think the big takeaway for us is, Airbnb is great when you've got a rural vacation or, want a place for a very large group or somewhere where there's not a lot of hotels. It's a phenomenal option then. But in terms of competing inside of cities or in areas, where it's just, 2 or 4 of you in a hotel room will do, people are really moving back towards the hotel experience, the consistency there. And that's showing up in the data. So we think, overall, Airbnb very fairly priced here. Don't really see a big edge either way.
Andy, I like having this discussion because there's so many interesting topics about Airbnb. Let's face it, Airbnb is kind of the Uber of vacations, right? They're asset light. It's really that their app or their website, their app that links vacationers to rent to vacation homes. And that's probably going to work. But the competition, it seems like to me, the real competition is the hotels who can compete on what? Price, right? I think it's the expenses that seem to weaken the interest from Airbnb users. They start to look at the expenses of cleaning and all the different things, and they just say, unless they have a group, it's really just not worth it. What can Airbnb? Here's our thing we do a lot, Andy. Andy, put on your Airbnb CEO hat for a moment and say, how can you make Airbnb more attractive financially? Because that's got to be what these hotels are doing. They're competing financially with them, or what are they doing that they're beating Airbnb here?
Well, I think Airbnb's done some of those things really well. They've kind of gone to all-in pricing so that, when you do a search and you see it's $159, for one night, you don't get to check out and figure out that you also have to pay a $250 cleaning fee. I think that was critical to the user experience, and they've done a pretty good job on that. The other thing I would say is, if I'm Airbnb, I would really think about leaning into what I'm best at. It's very difficult to compete with hotels where the customer's going to be satisfied if they get, kind of the a experience that they expect, a cookie cutter experience. They can just kind of leave the room a mess, check out and pay their bill, and that's all they needed was a place to stay. It's going to be tough for Airbnb to compete with that. But when you're talking about unique homes and unique places for unique sizes of people, or groups of people, then Airbnb really shines. And so I think leaning into what you're great at is probably the best advice that I can give Airbnb. And quite frankly, I think they're already starting to do that. The other problem that we see that Airbnb has to face is, Yahoo Finance survey said 60% of Americans say that Airbnb's hurt their local property appeal, and over half of people support some sort of ban on Airbnbs in their neighborhood or in their general area. So there's a political risk to this too that I think Airbnb has to get through. So again, I think it's about not trying to be all places and all things to all people, but instead lean into what made Airbnb great to begin with and what makes it still a great option for a lot of people in a lot of situations, and really highlight that and maximize the profits on those experience. I think that's the key, and I think Airbnb could do it. They're a phenomenal company with great execution. They just kind of got a little ahead of themselves, a little bit overexpanded, and users kind of fought back and said, "Nah, the hotel's good enough."
Yeah, and I think it goes back to what you mentioned earlier. People are willing just to stay in the hotels. It's an easier process. You don't have those additional fees, those hidden fees. Cleaning up before you leave, and all that. And you mentioned, the higher interest rates. This is all about scale with an asset-light model, Andy. Right? Is the fact that the more units that you have for Airbnb, the better Airbnb does. Barcelona just cut 66,000 units in their city, and other cities across Europe are doing it. So is that maybe one of the fundamental bases? You said getting back to what they know, but at the same time, if they can't scale up their business any longer, maybe interest rates, where people can purchase a second property, Airbnb it out, that's also a headwind at this point. So there's a lot of headwinds out there for this company as far as growth goes. And I think, investors are, telling them that because the stock has pulled back significantly.
Yeah, I totally agree. And, that's one of the problems with asset light is that you don't control the assets, and you're really relying on people that may have significantly more interest rate sensitivity than Hyatt or Hilton does. Hyatt and Hilton can sometimes deal with interest rates in a much more powerful, commercially viable way than individual Airbnb owners who may have gotten ahead of themselves, who may have an adjustable rate mortgage that's about to roll over, and they can't make money on their property anymore unless they charge out of market levels. So when you're asset light, you're also dependent on a lot of people and a lot of organizations that may not be as sophisticated at managing assets, interest rates, and the financials as your hotel large chain type of competitors. And so asset light does come with a cost. It comes with a lot of benefits, but I think we're starting to see some of those costs here. And I think the stock market's done a very good job of pricing and signaling to the company where it needs to go next.
All right, great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder of LikeFolio, breaking down Airbnb, which has been breaking down a little